Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are buzzing away in today's trading session. But now on the technicals, we have Dhwani Patel joining us on the show. She's the founder at Finversify. Dhwani, thank you so much for taking the time out and joining us. Let's talk about your first stock. You picked out INDL Bank for us. If I pull up the charts of this stock, last 6 months, in fact, negative returns coming in for this stock. YTD also, this stock is lower. Tell us, are you spotting some reversal on the trends here? Do you think now is the time for this stock to buck up?
Yes, absolutely. It's a reversal trade that's coming in on this particular counter. We are seeing a trend line breakout coming in on INDL Bank on the daily chart structure over here, where the stock has crossed above its short-term moving averages, and we are here for the next up move over here in this counter. From the current levels, going long on this one would give me a target on the higher side of 15.45 on the short-term basis, and given a positional pick over here, we will see a further move coming in this particular counter to 1600 levels. Ideally, the stop loss that one needs to maintain over here on the lower side is going to be a 1420.
All right, keeping with the banks then, the banking sector valuations look rather reasonably attractive. That's the word coming in from Vetri Subramaniam. Strong fundamentals and balance sheets are buoying the sentiment for banks, but will that be enough to center investor attention over the long term? Well, let's go across and listen to the excerpts of a chat with UTI AMC's Vetri Subramaniam.
Banks in general, if I were to put it that way, actually are one of the few sectors where valuations are reasonably attractive. And at the same time, for banks, most importantly, fundamentals are very, very healthy. Balance sheets are very healthy. So this is one sector where we think it's actually calling out, in terms of its valuations and fundamentals. And we actually think this is a great contrarian bet at this point of time. Of course, there are multiple issues that banks are facing in terms of headwinds, but it's only when you have headwinds that you end up getting, attractive valuation opportunities. And this is the pattern that we've seen over time. Go back and think about which were the sectors which were ignored, unloved 3 to 4 years ago, and see how much they are loved today. And, we think banks are very well placed for a similar kind of rotation.
Okay, let's move on from that conversation. Janay, you picked out Zomato. We had Zomato being discussed on the show yesterday as well on the back of a brokerage note, and today you have yet another brokerage that has come out with a fresh new rating for this stock. Tell us what the note tells.
We have a note by Bernstein, who have maintained their outperformance rating and have hiked the target price to rupees 330. Now what they say is the quick commerce economy continues to break all the stereotypes. There was stereotypes such as tried to box quick commerce, which said that only top up, not large baskets, only metros, not tier 2 cities, only rich, not middle class. But these assumptions are getting revised upwards every quarter, is what Bernstein is saying. Quick commerce is a compelling product across all the consumers, and they are embracing it quite well. Zomato remains the center of quick commerce companies, what they believe, and they're prioritizing the long-term leadership over short-term profitability, which is giving a positive view for long-term basis. On the back of this, Zomato will be in focus.
All right, moving on from Zomato to another stock that is in focus. Narayana Hridayalaya is in focus today, and it is on the back of a brokerage note that has come from HSBC that projects a 27% downside on it, and in fact on the basis of that it's totally declining in trading with cuts of over 4.5%. They've set a price target of 1,000 rupees per share. HSBC is anticipating that Narayana is likely to face a considerable margin drag due to costs associated to its new hospital Cayman Islands, and the benefit from the current initiatives are likely, at least they're likely to take 2 to 3 years away from the growth prospects, and on the back of that they're maintaining a reduce with a downside of 27% on Narayana Health, and on the back of that the stock is declining 4.5% in trade today.
Okay, well, so that is Narayana Health coming in. But Dhwani, you picked out Apollo Tyres for us. Tell us where do you see the stock heading, and what are the next levels you're spotting for this one?
The reason why it's on radar for me right now is that the derivative data is turning out interesting in this particular counter. We are seeing long build-ups taking place in this one, and from a technical point of view, in the last 4 sessions, the stock is sustaining above its 20 and 50 period exponential moving averages on the daily chart. As well as we are seeing that on the intraday chart basis, the volume is picking up in this particular counter as we are seeing the upticks coming in. So from current level, one can go long into it. The target on the higher side is of 550 that you can expect. On the lower side, the stop loss that needs to be maintained over here is going to be of 514.
Okay, so those are the levels to watch out for Apollo Tyres. Before we move on with the next stock, let's just address what's being flashed on the ticker. You have the Siam August data that's just been released, and we have the numbers for the local passenger vehicle. Those sales have come in at 3.52 lakh units, and two-wheeler sales have come in at 17.1 lakh units. Let's just take a look very quickly at what the Nifty Auto is up to, and slight bit of a spike coming in, a good recovery also being seen on Nifty Auto. 0.3% higher is where that index is. We'll be taking you through more Siam data as and when we get it, but let's just focus on that note and talk about Bajaj Finserv right now. This too is on the back of a brokerage note today, and MK is the one that has initiated its coverage on Bajaj Finserv. They've initiated a buy rating with a target price of 2,150 rupees. They believe that the top up of the newer ventures will supplement the strong core established business of Bajaj Finance and General Insurance. They remain arguably the best in the industry and maintain an edge. Life insurance has navigated well through challenging times and now among the top non-bank owned franchises is what MK believes this company to be. Newer businesses like AMC and securities have completed the product suite as well, and Bajaj Finserv Health also provides a huge opportunity for the long term. They see consolidated PAT compounding at 24% over FY24 to 27, and they believe Bajaj Finserv play is apt for gaining exposure to established and fortified franchisees as well. So on the back of this bullish note coming in from MK, initiated a buy rating, target price of 2,150 rupees. The stock is up almost 2.2%.
All right, moving on then to NMDC, that is trading with gains of almost 2%. It's trading with gains of almost more than 2.5% actually right now. It is on the back of the fact that it has set its 2,200 crores capex in FY25 for setting up a slurry pipeline and new processing plants. But besides that, NMDC, the state-run company, is also set to reward its investors by paying a final dividend of 150% on each stock for the financial year 2023 and 24. And on the back of that, the street is giving it a thumbs up. It's trading with gains of 2.5% right now.
Okay, on the back of that, let's shift focus, talk about Ramco Cements in focus today. Dhwani, you picked this chart out for us. You picked this stock for us. Tell us what this stock looks like on the charts, because Ramco Cement is not a name that we usually discuss. So tell us what levels you are spotting for this one.
So this particular counter actually has been on my watch list since the past 3 weeks over here, because on the weekly chart the stock had crossed above its 200 period exponential moving average, and it's sustaining above the same. What is interesting is that in the current week the stock is giving a closer above its 50 period and the 20 period exponential moving averages. So that's where the confirmation has coming into this particular counter in today's session. So one can go long into it. I would suggest a positional bet in this one for a period of about 3 to 6 months, where you can expect that first target over here of this counter is going to be of 930. Given 930 sustains on the higher side, it's going to be the next number of 1000 plus in this one, and the stop loss that one needs to maintain on the lower side for this counter is going to be of 810. So it's a positional bet for about 3 to 8 months of a period coming in over here.
All right, moving on then, Jinai, you picked out BPCL for us. Now, there's a joint venture agreement that has happened on this, but yet the stock is declining like 0.5% on trade. I think the oil wars are not ending anytime soon. Given the decline in the oil prices, ONGC, BPCL, both are declining in trade yet again. But tell us about the joint venture then.
So the management has approved entering into a joint venture agreement with Sepcorp Green Hydrogen India. Now this is in the domain for renewable energy and green hydrogen. They will be entering this joint venture with GPS Renewable for setting up a compressed biogas, which is a CBG plants across India. Now additionally to this, the company has also approved augmentation of Cochin Coimbatore Karur pipeline, which is CCKPL, and Irgur and IDPL pipeline, along with setting up Palakkad TOP Kerala investment. This investment will be of about 1,138 crores. Now apart from this, they've also proposed some additional capacity. First is for CCKPL pipeline, which is about 3.7 mmTPA, and one is for IDPL pipeline, where they will be adding up capacity addition of 1.1 MMTPA. On the back of this, BPCL will be in focus.
Okay, so BPCL is in focus on the back of that news flow. Let's talk about Nazara Tech. That's the next stock in focus. Remember, Nazara Tech was in focus yesterday as well. It was a good rally on that stock, and that continues for the stock today as well, because 3.6% higher is where Nazara Tech is, and the company has invested 982 crore rupees into Moonshine Technology, the parent firm of online poker platform PokerBaazi, making it the largest infusion by the diversified gaming and esports major. Now, the deal is set to enhance Nazara's foothold in the online skill gaming sector, aligning with the founder Nitish Mittal Sen's vision of making the company's top revenue driver the gaming segment in the next few years to come. So, big acquisition, in fact, coming in for Nazara Tech on the back of that PokerBaazi platform that they want to invest in. 982 crores is the investment. On the back of that, 3.6% higher is where the stock is at.
All right, moving on then, NLC India is also in focus. It has jumped, in fact, almost 2% in trade, and that is on the back of the fact that the coal ministry says it is eyeing 3x power generation capacity by 2030. For more details on that story, we're joined by Prakash Priyadarshi. Let's go across and take a look.
Yes, NLC India Limited plans a threefold increase in its overall power generation capacity by the year 2030. A very significant development coming in. Coal Ministry, which is a nodal ministry for the company, has come out with the details of the expansion plan, where it has mentioned that the special focus will be given on capacity addition for the renewable energy projects. Along with that, NLC India Limited is planning to increase renewable energy capacity by 50% of its overall planned capacity. That will increase to 10.11 gigawatt from 1.43 gigawatt by the year 2030. Along with that, when it comes to investment plan, that will be around 50,000 crore during this period, especially on renewable energy projects, and that will be done through NLC India Green Energy Limited, which is a wholly owned subsidiary company of NLC India Limited. At present, NLC India Green Energy Limited operates around 2 gigawatt capacity of renewable energy projects, and planning to increase its capacity by participating in various renewable energy projects by competitive bidding process. That's a very significant development coming in, and it will help government to achieve 500 gigawatt renewable energy capacity target by the year 2030. Along with that, NLC India Limited also envisages to increase the share of renewable energy from 50% at 2030 to 77% by the year 2047, and that will enable company to achieve net zero target by the year 2070. Back to you.
Okay, thank you, Prakash, for joining us with all of those details. On that note, we'll step into a very short break. More stocks on the other side of this short break.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. So let's get started yet again. LIC and IRCTC are the stocks that are in focus. In fact, LIC share was up over 1%, and so was IRCTC stock that was up 1.2% in trade today. They both have given up those gains, but nonetheless, they were trading with gains of over 1% in the morning. LIC has hiked its stake in IRCTC to about 9.3%. Now, the firm said it's a railway sector mini Ratna. The PSU has increased the 2.02% stake between December 16, 2022 and September 11, 2024 via open market purchase, and this is the second time that they are increasing their stake in IRCTC. On the back of that, both the stocks LIC and IRCTC are in focus.
Okay, so that's why LIC and IRCTC are in focus, but let's talk about one stock from the auto space, and that is Tata Motors. This is on the back of a brokerage note coming in this morning, where JP Morgan has maintained their overweight rating with a target price of 1,250 for the stock. They believe that profit warning by peers, but underlying trends remain stable, even though there are these profit warnings that the peers are cautioning the street about. JP Morgan also believes that India trends will remain volatile in the near term, and stock performance will hinge on the JLR performance of Tata Motors. Now, China trends are a worry, but it is being offset by strength in the US and UK market, as well as a consistent mix that the company has been showing to be improving, and believe the brokerage also believes that the stock could re-rate over the medium term as its balance sheet strengthens and EPS volatility reduces. So that's a note coming in from JP Morgan on Tata Motors. Quite the bullish note coming in. Maintained an overweight with a target price of 1,250. The stock is up almost 0.5%.
All right, moving on from one auto stock to another one. Bajaj Auto is aiming to recover 80% of its addressable CNG market by the end of September. That according to Rakesh Sharma, who's the ED Bajaj Auto. Let's listen into what else he had to say about the latest CNG bike and the company's expansion targets.
August, we were in about 60% of the addressable market, which means those markets which are served by the CNG network. By September end, we should be covering about 85%. So we should be in about 290, 300 towns which have CNG. Currently, our bookings are almost 15,000 units or so. And we are hoping to be able to bill about anywhere between 17 to 20,000 units this month, which is quite a jump from last month. So currently, our capacity is about 20,000. We feel that we should take this up to about 40,000 to 50,000 in the final quarter of this financial year, which is January, February, March. We will continue to monitor, and if it seems that even that capacity is going to run short, then we will take a call by, let's say, November, December, whether we need to invest in some more capacity, so that by the time we are on to the next season, which is next October, we are very fully equipped.
Okay, that's the word coming in from the management of Bajaj Auto. But Dhwani, let's just focus from auto to banks now, because you've picked out IDFC First Bank. It's been quite a while since we've seen this stock on a techie's radar. But if I take a look at the last 6 months, year to date, 1 year, all throughout the stock has given negative returns. However, in the last 1 month, 3% positive returns is what the stock has given. So do you think this reversal is going to continue for the stock and we can expect better returns in the future?
Reason why this one is on radar for me, the only reason is that it's a mean reverting trade that we are intending to take over here on this particular counter. If you check the short-term charts over here on an intraday basis for 30 minutes, the stock has given a reversal on the bottom side when we formed bottom somewhere around the 70s level, and from there the next swing bottom that is formed is around 71.50 paisa. So that's where the swing highs are going on the higher side, and then from the current level, if one goes long over here, we are expecting a target of 78 in this particular counter. Given a stop loss that one needs to maintain very strictly on the lower side for this counter is going to be of 72 rupees.
All right, moving on then. Jinay, coming to you. Cummins India is the name that you've picked out for us. A brokerage note that has initiated underperformed. Tell us, what is that brokerage note saying?
Well, as Cummins India will be in focus, as BNP Paribas have initiated an underperformance rating and given a target price of rupees 3,217. Now, what they believe is that Q2 is likely going to peak operationally for the company, and CPCB4 diesel genset pre-buying is now over as the channel filling is done. What they say that the royalties paid to the parent may rise due to CPCB4 plus electronic engine platform, and on back of this, Cummins India will witness some pressure going ahead. On the back of this, currently stock trading down about 1%.
Okay, so that's why Cummins India is in focus. But Dhwani, you've picked out ACC for us now. That's a cement stock. We don't talk much about this stock, but it would be good to have your view on where you are spotting this stock headed on the charts. What are the upside levels, if any, that you're spotting? Tell us why you picked this stock today.
Absolutely. This is the second cement stock that I'll be talking about today. The first one was Ramco, and now ACC is in focus. Given that the pack is seeing certain rise into it, these two counters are where I've been seeing convincing moves coming in. In ACC also, the move is backed by volumes, which is very interesting over here. The stock is soaring above its important EMAs on the short term and on the long term charts over here, and what I'm spotting over here is that given a buy at the current level, the next target on this counter has to be of 2600, and given 2600 holds out, I'm looking up at 2650 also coming up in this particular counter. The stop loss that one needs to maintain over here is going to be of 2450. Given any price closing below the same, we'll see a certain structural reversal coming in, but till the time this one is intact, I see upward rise coming in this one.
All right, with that, we've come to an end of Market Fatafat. Dhwani, Jinnai, Arpit, who joined us in the first segment. Thank you so much for joining us today. With that, it's a wrap. Snehi and I will take your leave. Thank you so much for tuning in. Closing trades will take the action forward.